begin. So today's presentation is designed to educate members on the Community Development Advanced Program and how that program can overlay with your existing lending activity. That is the primary goal of today's presentation. It's going to cover at a high level what the CDA program is, the two features that are administered beneath those programs, which is the CDA Extra and CDA. Both of those programs offer a 3-month look-back feature, and some of the application types do require some minimal reporting features. And then we'll share with you just some resources that you can utilize when trying to determine whether or not you have a loan or a pool of loans that are CDA or CDA Extra eligible. I noticed that there are quite a few of you that either have not participated in the program or it's been some time since your organization has engaged with the CDA program. So I just want to give you some background on its origin. The CDA program is administered by the Federal Home Loan Bank under the Federal Housing Finance Agency's CICA program, or CICA regulation, which stands for Community Investment Cash Advance. That program is designed to serve beneficiaries, households, or businesses meeting certain area median income disciplines. And the programs will target specific beneficiaries based on the program that you're engaging in. So I'm going to take you on a deeper dive on and speak first about the CDA Extra program and how that program works, and then I'll move on to the CDA program. Feel free to ask any questions as we move forward in the presentation. I hopefully will cover them as we move forward. For any of you that are looking for a copy of this presentation, that is available in the handout section. So feel free to download that and utilize it as part of the training or share it with your counterparts. In terms of the CDA program, all members have access to both programs. The CDA Extra program is designed to serve beneficiaries or households with incomes that exceed no more than 115% of the area median income. There is a small carve out under that program that's serving businesses or businesses that provide services to households with incomes at or below 80% of the area median income. But the primary focus of the CDA program is to support residential activity. The CDA program is also a discounted program, and it's designed to provide funding support for non-residential activity, and its eligibility is encompassed based on the logistics of the benefiting business, and it's determined based on its urban or rural designation. And if it's in an urban area, it's at or below 100% of the area median income. And if it's in a rural area, it's at or below 115% of the area median income. Just to give you some flavor of how the program has performed, it's been in existence since 1990, and it has served to provide more than 17 billion in CDA funding dispersed across the 6 New England states, and it also it reaches outside of New England. So if you have a footprint outside of the 6 New England states, the CDA program can still support that initiative. In addition, in terms of end beneficiaries, it's provided housing for just under 80,000 households and created a financial tool for just under 2,000 economic development initiatives. Now, how does this work for you as a member? It is designed to sit and overlay with whatever you are already doing in your shops, and it gives you the ability to compete on term, lock in your spread for your customer, and also mitigate your interest rate risks. And all of this is doing and providing you with a lower cost financing to support all of this activity. Some of these loans that you're originating can also be considered for CRA credit. So these are things to keep in mind with the benefits that are available to you as you're doing your day-to-day business with your customers and trying to provide them with low-cost financing to support their residential or business activity. In terms of the financing, the CDA and CDA Extra rates sit dominant on the Federal Home Loan Bank's website under our rate schedule. This is just an example of the rates that were offered at the end of yesterday, so on March 20th. And you can see in comparison to the Federal Home Loan Bank's regular advance, the CDA Extra is the lowest of the two. So that's the one with the darker band bar around it. And then the CDA is a little bit higher, but both are below the regular advance. And this is just a sample of the rates that are available in the terms. We allow advances for the CDA and CDA Extra program to go out to as much as a 20-30 amortizing schedule. And if you have other terms, you can certainly engage with our member funding desk to discuss any other small nuances that you're looking to in terms of pricing. In terms of how you engage with the program, this is where we transition into how this all works with that basic information. Each member during any one calendar year has the ability to disperse a maximum of $15 million under the CDA program and $35 million under the CDA program for a total of $50 million in disbursement access in any one calendar year. You can engage in this through one application or multiple applications, provided that the multiples, when engaged, do not exceed the maximums for each of the program disciplines. The process for submitting your application, all of the Federal Home Loan Bank's housing programs, the way that members access them will always be through a secured online portal. The CDA and CDA Extra are accessible through this online portal. Once you start the application, you have 10 calendar days to go in and out of the application prior to submitting. Once it's submitted, the Federal Home Loan Bank engages in reviewing over the course of 10 business days. Once it's approved, there's no commitment to borrow. So you can request the funds to support a program or a specific customer, but you are not held to any advance activity until you engage with the member funding desk. There's no disbursement restrictions, and what that means is that you can request a certain dollar amount, for example, a $10 million request. That request you are able to borrow in whole or in part. So you can do multiple draws until you max out on the amount you requested. And then once the application is approved, you have 6 months to complete all of your disbursement or funding activities. So you could get approved on one day and be approved for 10 million, you draw down 1 million, you still have that 6-month clock that's running to access the remaining 9 million. Currently, the program does not allow for extensions of any approved application. So the application will remain open for you to disperse funds for that 6-month period. Once that 6-month period ends, the facility is closed and you will no longer have access to it through the member funding desk, but you can submit a subsequent application to either support that same customer or continue to support the program to the extent you still have funding availability in terms of your limits. Some of the applications do require reporting. And I will highlight those specific applications as we move further into the presentation. And any other types of access will also be discussed as we move further into the application. In terms of questions, if you have any questions as I continue to move forward in the presentation, feel free to type those questions in, and I will review the question to see if it aligns with what we are currently discussing, or I will address it as I move further in the presentation. In terms of how you access the application, as I mentioned, it is facilitated through an online secure portal. You would submit your application through that portal. You want to make sure that you are using your own username and password. If you do not have one, you can certainly request one through the first-time user option. Once that application, that request for an account has been vetted, you will be able to log into the system and access the program or programs that you have access to. You want to make sure that you're not sharing your username and password. It's important that we do that, that you do that so that you don't end up inadvertently locking yourself or your counterparts out of the system. We do not limit the number of staff members that have accounts, so it's important that you always maintain your own individual account. It also enables us to understand who we're actually dealing with at your organization, and so we can reach out to the correct individual for questions. There's also a certification in the online application, and that application is digitally signed by the person who is signed into the system. So it's important that it's always recording who is actually engaging in the screens for the application. In terms of the process for applying, it's really straightforward. The application is designed to collect data primarily. So you're going to enter data information that's specific to the application based on its type. And once you engage, you're going to select the community lending programs option. That option will give you access to the suite of CDA application types, and you're just going to select the type that aligns with the activity that you're trying to get approval for. And then you're going to provide the data, validate the data. The system is designed to let you know if it appears that there is not sufficient information to successfully submit, and it will highlight the areas that it needs more data. Once that's successfully done, you'll get a validate screen, and then you're just going to sign and submit. Now that we have the navigation information outlined, I'm just going to move into what you want to think about when you're engaging in our screens and how you want to assess whether you should be applying for CDA Extra or CDA. In terms of CDA Extra, there's a variety of uses that you can use the CDA Extra for. As I mentioned, it's primarily to support residential activities. So this is your ownership and rental initiatives primarily, and then there is a small carve out for economic development. So I'm going to talk about the residential piece first. Residential applications is designed to secure data that confirms that the beneficiaries or the individuals benefiting from the CDA Extra funds, their household income does not exceed 115% of the area median income. And there are specific application types that you want to consider. The first is a programmatic application. So that's if you're administering a first-time homebuyer program. You could have multiple programs or a single program. You can actually submit a CDA Extra application to support that program. And then if you have a particular customer or programs designed to support rental initiatives, you can utilize the project specific option where you can enter the information for that type of application. It also has a look back feature for that as well. In terms of how you use the funds, it can be done using future origination. So these loans are in your pipeline and it's not fully baked yet, but you know it's coming down and it's expected to close. You can always use the program for that. It's usually primarily used for the programmatic piece. But if you have a customer that is going through your loan committee and it's moving on a fast track, or you have an indication that it will be closed within the next 6 months, so from the time you apply, then you can certainly use it, that future originations piece. It also allows you to support a variety of different other types of funding types, including low-income housing tax credits, whether you're purchasing them or you're providing financing for a low-income housing tax credit deal. Participation, so there can be multiple members participating in one community or initiative in your lending footprint. Each member can come in for their own respective CDA allotment of funds and participate in that bigger project. It does allow for refinancing and a variety of other types of lending. What you want to consider, what you want to think about when you're engaging in the screens is not so much what the business line is, with one exception. And it's more how is this initiative eligible? The features that the CDA and CDA Pro Extra programs do not support is any structure or entity that is linked to your organization. For example, if you are financing or purchasing property that's supporting your business operations or anything like that, it is not eligible for CDA extra funding. It also does not support the financing of any cannabis businesses. These are the two things that the CDA Extra and CDA programs cannot support. As I mentioned before, CDA Extra is primarily to support housing activity. For single family owner occupied units, all of the units must be serving households with incomes at or below 115% of the area median income. So documentation that you provide with that application must indicate the household's annual income, and that income based on the purchase property address must document that the household income does not exceed 115% of area median income. For rental initiatives, the same discipline applies, but you only 51% of the units need to meet that 115 cap. So it doesn't matter the scale. So to the extent that all of the units are rental units, 51% or just over half of them have to be serving households at or below 115% of the area median income. The balance of the units can be market or something higher than that, but you just need to document that 51% as meeting the regulatory requirement. In terms of manufactured housing parks, you can qualify the park itself based on the census tract, so the physical location of the park. To the extent that it's in a census tract that's at or below 80% of the area median income, then the park would qualify. In terms of economic development under CDA Extra, this primarily is used for business that are located in census tracts where the census tract itself is at or below 80% of the area median income, or it is benefiting families at or below 80% of the area median income. And it can be used for a whole host of activities. Your commercial, your infrastructure, or anything like that, it can be used to support that type of activity. What's going to dictate whether or not it can qualify is who it's serving and where it's physically located. The business line would not come into consideration here, except if it's for, like I said previously, your operations or main office type of structure that's supporting your business, or if it's to support a cannabis business. Those two types of business lines, it's not eligible for CDA or CDA Extra. But other types of activities are more than welcome to come to the screens for review. And this is just an opportunity to break down the different ways that that the eligibility for the economic development component, so these non-residential structures. The reporting for this particular type of application is triggered if you are submitting an application and you indicate that that application is qualifying based on the fact that the business is creating or retaining employment for income eligible workers. At least 51% of the workers need to have incomes at or below 80% of the area median income. To the extent that that has been satisfied, it would qualify. So let's say it's a business and it's the census tract does not qualify. You can certainly explore whether or not the employees, or at least 51% of the employees of the business, meet that 80% qualifier, or the business is serving families at a 50%, 51% level, where their incomes do not exceed 80% of the area median income. This is easily documented either through a declaration from the employer or the customer that you'll be dealing with. They only need to provide you with written confirmation that they have a certain number of employees, and of those employees, that at least 51% of them, their annual income does not exceed the AMI for 80% of the AMI for the location of the business. We are not looking to receive the full employment roster and the incomes of those employees. We're looking for the customer to provide you with that statement, and that's what we'll use as documentation for eligibility. And again, there are also some automatic qualifiers in addition to the census tract. To the extent that any of you are aware of these locations in your lending footprint, an automatic qualifier for businesses is if it's located in any of the champion empowerment or community areas. Those areas are automatic qualifiers, and we have resources that we can share with you to determine whether or not you're lending in that particular area, any of those areas. Another application type that's available under the CDA Extra is what we refer to as a CDA Extra mixed use. And the way that you determine whether or not the customer or the loan is going to qualify is if it meets both the residential and non-residential eligibility components under CDA Extra. That would mean that you would need to be able to provide us with documentation that at least 51% of the units benefiting from the CDA funds are serving households at or below 115% of the area median income, and that the business side or the non-residential side of the structure is either located in an income eligible census tract, or it has at least 51% of its employees with incomes at or below 80% of the area median income. This can and has been done depending on your familiarity with your customer and their business line. But this is the way you would qualify for mixed use. So this allows you to blend the benefit of the CDA Extra for something more than just one defined activity. You can blend both the residential and non-residential components. I'm going to transition to the CDA side of the program, but I wanted to take the time to pause just to make sure that everyone is appreciating how the CDA extra side of the program works. I'm just going to, without putting the screens up, I'm just going to refresh your memory in that it is CDA extra is designed to support residential activity primarily. It does have a small carve out for non-residential activity. And when we say activity, we're talking about the structure itself. So the structure that's benefiting from the CDA extra funds is either serving residential activity or it's serving a business with no residential component in it. And right now, to determine whether a household is eligible under the 115 AMI indicator, we are using the HUD income guidelines to make that determination. We are currently utilizing the 2023 HUD data. Once HUD updates its information to 2024, we will transition and then utilize the 2024 as a resource. Seeing that there are no questions, I will just continue to move forward and discuss the CDA program side of the program. The CDA side of the program is primarily its focus and function is to support non-residential activities. So the businesses or structures primarily contain no residential space. Applications can be submitted to support programmatic activity, for example, a small business lending program, or it can be to support a specific customer or loan where the business is either in a urban or rural area and that the census tract is income eligible or the beneficiary is income eligible. The CDA side also has a 3-month look back feature, and it allows you to submit multiple loans under the same discipline for review and eligibility under the CDA program. In terms of the uses under CDA, just like CDA Extra, it allows for a variety of uses, including future originations, refi, and other types of activity. It also does allow for participation, just like the CDA Extra. And just like the CDA Extra, it does not support your construction or refinancing of your own businesses. When I say businesses, your headquarter, branches, operation offices. It also does not support dispensary businesses. For CDA, the way you qualify, as I said, it does only support non-residential or mixed-use activity. And to the extent of where that business is located, it will receive an internal urban or rural designation. Once that designation is established, we determine whether it is the benefiting families or census tract is either at or below 150% if it's in a rural area, or at or below 100% of the earned income if it's in an urban area. Just like with CDA Extra, it does support all types of business activities. It's not listed on here, but working capital is also an option under this commercial initiatives in terms of the activity that's underneath. But all kinds of business lines are eligible under the CDA. In terms of eligibility options, when you engage in the screens, one of the screens is going to ask you, how does your activity qualify? And this is a snapshot of all of the different ways that your business can qualify. And you only need to meet one of them. So if it is determined that you are submitting an application for small business lending, to the extent that that program is being administered under the guidance of the SBA regulation, it would automatically qualify. In terms of the business line, you just want to keep in mind to not incorporate any loans that are ineligible under CDA. But aside from that, the SBA program is very heavily used by our members that do that type of activity. And you can certainly just come into the screens, provide a copy of the program that you're administering, and select the small business eligibility option, and that's the extent of the application. It's really that straightforward and that simple. You need not provide any additional information when you're doing it prospectively. In terms of a look back, we do have a designated look back application to support small business lending. It's designed to capture each of the individual loans and capture the NAICS code that's associated with those small business loans. If you don't have any of the automatic qualifiers that are noted here under located in, with the champion, CAPE, and so forth, you can also look to whether or not the business is creating or retaining jobs or benefiting income eligible families. Those two eligibility options, like I said before, do require some reporting or additional documentation. I'll kind of hone in on the jobs created or retained. What we're looking for, as I stated before, is a declaration or written document from the customer that identifies the total number of their employees, and of those, that total number, at least 51% of them need to have an annual income that does not exceed 100% of the area median income for an urban business, and 115% of the area median income for a rural. To the extent that the customer has provided you that, you can certainly submit an application to support that activity. Just like with the CDA Extra, the CDA side of the program does also offer a mixed use application. The distinctive difference between the CDA Extra application and the CDA is that you only need to provide eligibility documentation for the non-residential component. You would only need to tell us how many residential units are in the structure, but you do not need to provide income documentation for the residents that will be occupying that space. Just to give you some a better understanding of how we're making the determination whether or not a particular application or program is eligible, we do utilize the FFIEC website to determine if the physical location of a business is in a income eligible census tract. And we basically enter the address into the system, and it will give us a determination. To the extent that that determination is at or below 80%, if you're trying to get approval for the CDA Extra, then it would qualify, and the same would apply in determining whether it's in an urban or rural area that's eligible on the CDA side. In terms of income eligible beneficiaries, again, we are still using that FFIEC website, but this time we're looking to review the median income family indicator. And then we will default to that 80% in urban and rural AMI percentage to establish whether or not the full-time employees are for a business is eligible, or the customers or family beneficiaries would qualify for each of the respective programs. If anyone has questions on how we engage in all of this, we can certainly discuss this offline. Feel free to reach out to me, but it's the website, the FFIEC website is basically enter the address for the collateral business, and it will give you a statistical readout, and you're just looking to lock in to ensure that you're at or below the eligibility indicators for either the CDA Extra or CDA program. As I mentioned previously in the presentation, both the CDA Extra and CDA does allow for the submission of multiple loans, so more than at least two loans that are of like type to be submitted in the form of a spreadsheet. That spreadsheet is specific to the Federal Home Loan Bank, so you want to make sure you're always using the spreadsheets that's provided within the online application. Once you select an application type, it has a designated spreadsheet where you will populate with the loans that you've closed within the last 3 months. Those loans have to be aligned. So you would not want to submit a spreadsheet that includes loans closed under your, for example, your first-time home buyer program. You don't want to combine it with loans that are closed under your small business lending program. The system, those two types of applications have different eligibility requirements, and so they cannot be submitted together. But you can submit two separate Excel spreadsheets for each of the respective financing types. So one for your first-time home buyer and one for your small business lending, and they will be reviewed and assessed. The way the lookbacks are designed is you will submit those listing of loans to the extent that the loans have a closing date that is within 3 months of submission. The system will review each of those loans based on its eligibility indicator. So if it's a first-time home buyer program, it's going to review the list based on the household income against the purchased property to ensure that that household income does not exceed 115% of the real median income. To the extent that that's the indicator, then that particular loan will qualify. The system will also ensure that in a listing of loan of 10, for example, if one of the loans, the household has an income that's above 115%, the application will still move forward. We will just not count the face value of the loan for that household where their income exceeded 115% of the annual income. We would continue to review the application and execute an approval for the loans that did qualify in the spreadsheet. I did highlight as part of this presentation the application types where reporting is required. That reporting can be provided at the time of application, or it can be provided post-approval. If it is provided after your application is approved, what will happen is once you have dispersed from that approval, so let's say, for example, you submitted an application for a first-time homebuyer program and you did not have the supporting home buyers underneath that submission. So you're looking to front load your first-time homebuyer program. What would happen is you'd still get approved, but when you disperse for the first time under that program, we will be looking to secure documentation of the funds actually benefiting a household where their income was at or below 100% of the area median income. Now, the way that's facilitated is once you disperse, you'll receive an email requesting the required eligibility documentation that corresponds with the program that you submitted and with the amount that you dispersed. For example, if you were approved to front load your $10 million for your first-time homebuyer program, and once you're approved, you dispersed, let's say, $2 million. You'll receive an email the next business day confirming the $2 million disbursement and requesting that you provide a listing of loans that are equal to or greater than the $2 million that you dispersed. You'll have 30 days to provide us with that information. And the exercise works similar to the look back. So you'll send us, there's a pre-developed Excel spreadsheet that you will populate those loans with specific data elements that the system will review. It will review those loans and determine how many of the loans that are in that Excel spreadsheet meet the eligibility income for the household, and we will credit you. If, for example, you drew down $2 million, and you provide us with a file with, let's say, 2.5 million. Of that 2.5, only 1.5 had eligible households. You will receive credit for the 1.5, but you will still be required to provide us reporting until you satisfy the full 2 million that was drawn down. And that exercise would continue until we reach the full eligibility for the amount that was dispersed. We're approaching the end of the presentation, and I just want to just reach out to folks to see if there are any questions at this point. And then I'd like to just test your knowledge and see how well this information was received. And we're just going to start with this first question. What is the member's annual disbursement limit for a CDA Extra program? Oh, looks good, looks good. That's perfect. The correct answer is the CDA Extra program is 15 million. The balance of the 50 million that's available to members is 35 million for the CDA program. So anyone of that was has selected the 35 million. That limit is for the CDA side of the program, not the CDA Extra. Okay, let's try another one. Let's see if anyone knows, what does an approved CDA application, or when does a CDA Extra or CDA program expire? Oh, this is great. Just give it a few more minutes. We just want to make sure folks have an opportunity to submit their response. But it's looking like most of you are appreciating what that time period is. Any application approved under CDA Extra and CDA is available to you for disbursement activity for 6 months. Once we reach the 6-month mark, the application closes and there would be no further access to the application. And we'll just try one more. Okay, can anyone tell me which of the programs can be submitted for a small business lending program? All right. Well, I'm just going to redirect folks. Small business lending applications can only be submitted under the CDA program. So you just want to keep that in mind. CDA Extra does support non-residential or business activity, but you cannot submit an application programmatically for small business lending. We do look for some specific data elements in a small business loan that is not uh, an option under the CDA Extra. So if you're looking to submit an application for CDA, you want to make sure that it is, I'm sorry, if you're looking to submit application to support small business lending, you want to make sure that you're selecting the CDA application and not the CDA. Okay, that concludes it. You guys did a really good job. With this understanding and that redirection, I just want to just remind you of some elements of today's presentation. The CDA and CDA Extra are both discounted advances that are available to members. The rates for these advances are slightly lower than the Federal Home Loan Bank's regular advance. They're designed to support both residential and non-residential initiatives. Each member in any one calendar year has access to no more than $50 million in disbursement activity, 15 million on the CDA Extra side and 35 million on the CDA side. And this allows you to compete on term and potential CRA consideration. When submitting the application, you want to keep in mind that it's 10 business days for Federal Home Loan Bank staff processing. We do have the ability to accelerate the application review process. There is on the advanced screen of the application, you can indicate if you're looking to get access to the funds in a shorter time frame, and we will make every effort to meet that shorter time frame, but typically it's 10 business days. The documentation that you provide with any of your applications must be aligned with the application type that you submit. So you want to make sure that if you're submitting an application for first-time home buyer, that the documentation or the program that you provide must be outlining a first-time home buyer program, and for example, not outlining your small business lending program. That would be insufficient documentation for that particular application type. Once approved, all applications are available for disbursement activity for no more than 6 months, after which time it will expire. And then I just want to take the time to highlight this suite of programs that are available under the Federal Home Loan Bank's community lending programs. These are just a snapshot of these programs. We can certainly provide you with more detail on how these particular programs work. I do want to call out that the Federal Home Loan Bank's CDA program, specifically CDA Extra, pairs beautifully with these other programs, with the exception of the New England Fund. For example, if you are a member that participates in the Affordable Housing Program, you can actually utilize the CDA Extra program to provide the permanent financing as part of an AHP development. A lot of members actually do pair the two programs to support a particular initiative that's being submitted for the AHP rounds. The Equity Builder, POW, and Lift Up, to the extent that you have a prescribed first-time home buyer program where you are utilizing the Equity Build, any of these down payment assistance programs, you can certainly further reduce the pricing on your CDA using the CDA to support these programs. You just only need to provide us with a copy of the program description. A lot of members actually use the Equity Builder flyer as their documentation for the programmatic indicator, and they basically just submit the application along with the flyer as their documentation, and they're able to benefit from the prescriptions of both programs, which helps the home buyers tremendously. The Jobs for New England is another program. While the Jobs for New England has some specific eligibility requirements, it does allow, there's nothing that precludes you from not only providing that customer with the 0% financing under J&E, but if you wanted to provide them some additional financing, you could certainly submit under CDA for that as well. The other thing to keep in mind is all of the programs that I mentioned, with the exception of the New England Fund, these are all programs that have specific application open closing dates and specific funding disciplines. So you want to keep that in mind. The Equity Builder and HOW programs have already launched, and members are in the process of ramping up to start extending homebuyer funds to homebuyers. The Affordable Housing Program is in the early stages and will be launching in the next month or so. Lift Up is anticipated to launch, I believe, early next week in terms of notification for the application period. Once that launches, you can certainly start setting up your outline for how you could engage with all of these programs and kind of unilaterally extend financial benefits to each of your customers through utilizing these programs. The New England Fund program is a small carve-out that's actually designed to support comprehensive permit types of applications. This type of activity is primarily dominant in the Massachusetts and Rhode Island states. So to the extent that you've had any inquiry from customers or have used this program in the past, that this program still exists, and you can certainly take advantage of that as well. For any of you, as I mentioned before, that are new to the program, or it's been some time since your organization has utilized it, feel free to reach out to me if you have some additional questions. If the presentation where you're not sure if something would qualify, you want to just take a deeper dive into the program, how it can benefit you and your counterparts, feel free to reach out to me, and I can certainly go provide you with more definitive responses to any of your questions. The questions could also incorporate these resources that are available to you. I did attach the fact sheets that are noted here in this presentation, so feel free to grab them while the screens are still engaged. In addition to the fact sheets, it has more detailed information on eligibility for CDA and CDA Extra. We also have provided links to the HUD income guidelines for the residential activities, the FFIEC for economic development types of activity, and then rural eligibility. That's just to indicate whether or not your collateral or lending footprint is in an urban or rural area. And then if you're looking to get a sense of where any enterprise or empowerment communities are located, this is another address-based website where you would enter the address and it would give you a response to let you know whether or not that property is located in any of these in communities. I am your primary resource for the Community Development Advance, but I'm not alone. I have a full bench of individuals that are seasoned in the program and can certainly assist you with not only this Community Development Advance, but any of the other community lending programs that are offered by the bank. I encourage you to reach out to us and have further dialogue with any questions that you may have. And we also have some counterparts that are designed to provide you with information on the full suite of bank services that are available to members. And these are our sales and business development team. They actually engage with primarily your senior staff, but that doesn't mean that you can't reach out to them with some questions on the bank's overall suite of activities that they can provide to you. And that concludes our presentation. If any of you have questions, feel free to type them in the chat. And again, as I said, if this is something where you still want to reach out to your counterparts and have some additional dialogue and then reach back out to us, feel free to do that as well. Okay, if no one has any questions, I want to thank you again for your time. I'll give you back 5 minutes on your morning, and enjoy the rest of your day. Thank you.